Bitcoin bounced back a bit, but the world financial markets seem to be in turmoil with huge question marks across the board. We have NVIDIA earnings today, which we all know is effectively the Super Bowl of financial markets at this point. The yen carry trade once again seemingly unwinding. And of course, Jerome Powell and the FOMC today. What does it all mean for Bitcoin? And should we even care what it all means for Bitcoin? Because we all know where Bitcoin is going. And one of my favorite people to talk with about Bitcoin, the future, basically everything, is my friend Jeff Garzik here from Hemi and of course from Block. We're going to talk about all of it and more. Let's go right now when I can actually trigger the thing because StreamYard's broken again. Let's go.
Let's go.
Happy NVIDIA earnings day to all those who celebrate. Good morning, everybody. I'm going to go ahead and bring Jeff on right now. Almost every day, Jeff, I have an embarrassing moment where something software related doesn't work. Like I pushed the button, music just didn't start. The other day, we couldn't end the stream, so it just went on indefinitely for 4 hours. It's a good time.
I love it.
How are you?
Being a software developer, we get all the mud from all the users everywhere. But good to be here. A lot of fun.
I mean, how about Cloudflare, right? I mean, yesterday the entire internet was broken for 4 or 5 hours. Not our main topic here, but man, you know, when we talk about decentralization and centralized systems being problematic, couldn't use 4 or 5 crypto exchanges. Twitter was entirely down. I mean, it seemed like literally the world was broken. Maybe there could be a better way with some technology we often talk about on this channel. I don't know.
Yeah, the joke that all the engineers are sharing is, the internet dream in the 1990s is the big beefy Chad internet where you host your website on your own Linux server in your own house. And then it's the big beefy Chad meme. And then the little wimpy dog is today's Cloudflare. Everything runs through Cloudflare. You know, nobody's self-hosting anything anymore.
I mean, I'm sure that there's a way to solve this, but we're not going to figure that out today. I want to start sort of with the broad strokes on the Bitcoin market. I could be wrong. Have you been here for literally every cycle?
Literally every cycle. I've been there since before Bitcoin had a price.
Yeah. I mean, you're Satoshi, allegedly. Right? I mean, you're on the short list of potential Satoshis last I checked.
If I was Satoshi, I'd have a little bit more money in the bank account, I think.
Yeah, well, maybe not, because you'd be afraid to ever move any of it out of your Genesis wallet. But here we go. Bitcoin hits bear market territory. History says the cryptocurrency will do this next. That's Yahoo Finance now is using YouTube level clickbait titles. Good job. We'll do this next. To unpack this, first of all, their definition of bear market is the standard one, is when you start closing, over 20% down for an extended period of time. And I mean, Bitcoin's in the red for 2025, so it's hard to argue with, I guess, in that regard. But by that metric, they're saying that Bitcoin goes up on average 1% over the next 12 months. And last time I checked, we get 20% corrections like 10 times a cycle. So that's not true.
It's not true. It's the vol trade. Fundamentally, Bitcoin is a volatile asset right now. And honestly, to steal a fast food restaurant's tagline, I'm loving it. Because I'm over here on this DeFi project that I don't know if we want to mention the name, but it's all about DEX trading of BTC. And so fundamentally, volatility is what this project loves. And their fees are spiking, interest is spiking, interest in BTC is spiking. And you get all that whether Bitcoin's going up or down. And so there's a lot of Bitcoin volatility. The long-term holders are definitely feeling some pain. But let me tell you, the traders are enjoying the momentum trade.
Okay, let's talk about that trade though, because that this reeks of the carry trade that we've heard about before. We'll get into the carry trade, I guess, on the yen, but in the past, where you would basically like short the premium on GBTC or on futures and long spot, and you collect the yield in between. I mean, is that effectively the trade that you're talking about right now? And has that trade now become more accessible in a way that could be what's explaining this sort of dampening of volatility or the price slowly bleeding out?
No, I'm talking about something specific in DeFi. I guess I'll throw out the name.
Do
Yield
it.
Basis is one of Curve Dex's sister projects, and they're doing something interesting with their Curve USD stablecoin, whereby they're adding a small amount of leverage. None of this like 1,000x perps, leverage type stuff. They're
100x will
adding,
go home. Are you
yeah,
even trading if you're not
exactly.
using 100x?
2.5x leverage on Curve USD into their own LP pools. And what this does allegedly eliminates impermanent loss in DEX holding. And so people are currently holding BTC and yielding over 10% in a bear market as well as a bull market. So it's all about, as long as people are trading Bitcoin, you're generating trading fees, to these LP pairs, and you're getting that small amount of leverage, 2.5x leverage on top. And they are just soaking it up. So, while the macro, which we were talking about off camera, was, definitely painful, the yen carry trade unwinding, all that fun stuff. Over here, there's like green shoots and bright spots in this corner of DeFi, where again, anytime it's volatile, it doesn't matter whether Bitcoin goes up or down. If there's trading, if there's volatility, they're making money, they're loving life, they're adding to their Bitcoin stacks.
Wow. I didn't realize that was so popular and being so heavily taken advantage of at the moment, but that definitely does help explain a lot of things. I mean, the other narrative has been that the early whales have been selling, right? I know it's like the most annoying thing now, but when you see hundreds of thousands of coins moving to exchanges and basically being offloaded, that's a lot of supply and selling pressure. I mean, do any of your fellow potential Satoshis and early whales, like, have you heard them so, disillusioned with the government and BlackRock adoption that they're unloading their stacks? Or maybe you have some, opinion on the guys basically being 15 years old or having kids and saying, I'd really rather a yacht than some of my Bitcoin stack. Like, you're in the Reddit chats with these guys. Like, what's going on? Because it's been a pretty prevailing narrative.
There's a secular rotation. There's kind of a, I'm not, I won't claim to be statistically representative, but what I hear is institutions are coming in, ETFs are coming in, the Michael Saylors are coming in. They're all buying Bitcoin. They're all setting up digital asset treasury companies, pubcos. Of course, many of those, the MNAV is under 1.0 now, but fundamentally they're soaking up Bitcoin. So the OGs wanted to give them Bitcoin and maybe, cash out a little bit before the next wave. So I've definitely been seeing some of that. The institutionals and the DATs, the public treasury companies, they're still going strong. They are still soaking up Bitcoin. Also, Ether, Tom Lee's Bitmine or Bitminer, is buying Bitcoin, buying Ethereum,
All of it.
in like $10 million tranches and stuff like that. And they're probably, all of them with the latest dip, they're probably buying the dip as well. So there's definitely OG rotation to ETFs and institutionals. And I think, fundamentally, the dip is more about macro than the crypto industry, because there's still appetite in the crypto industry for these pubcos to soak up Bitcoin and Ether. I think, again, Japan is swamping everything, and the fourth turning is swamping everything from a global macro perspective.
All right, we're going to talk about that in a second, but I just want to point out, yes, BlackRock leads near 3 billion November ETF exodus with record 523 million outflows. We're getting outflow records now in the ETFs in the first 18 or 19 days of the month. It was not supposed to be that way, right? We had record-breaking inflows for so long. I mean, maybe just like to go back to the original question, as cycles of the past have been, this is not the same, right? You kind of talked off camera. I was like 2025 we're flat. Now coins are down bad, right? So this is supposed to be the boom year of the 4-year cycle. So A, do you believe in the 4-year cycle? And B, in context of everything happening this year, how do you actually like prepare for whatever comes next? What do you think that will be?
Oh, that's a really good question. And I think crypto is maturing. What I mean by that is you got these 3 and 4 year cycles when crypto was in its own self-enclosed bubble. But now that we're integrated into the worldwide financial structure, which is a recent happening in the past 12 months, 24 months, that we're much more, unfortunately, correlated with the global macro. And so it's less about 3 and 4 year crypto cycles and more we're getting plugged into the global macro, whether that's, going into cash and hard money and away from stocks and bonds, or whether that's a yen rotation, or, the ETFs are now legal. So you get a bunch of inflows because it was a 0 to 1 moment. You had a lot of those 0 to 1 moments, and hopefully not too many 1 to 0 moments in the past 12 months.
Yeah. So listen, let's talk about the macro that you mentioned. There's a lot of it happening. Obviously, we have Japan, and you've been relentlessly retweeting this stuff. And you just mentioned the fourth turning, so I can tell that you are leaning more doomer than boomer in this case, right? So Japan's 30-year bond yield jumps above 3.3% for the first in history. I believe that should have said first time in history. This guy's actually been just like relentless about the Japan trade and what it means. But it's very clear here that the trade that has funded so much of financial markets has been borrowing the yen at 0% and using that money to go spend literally everywhere else on things that are yielding higher, right? I mean, you just got free money in Japan. Well, now when rates are jumping, 70 basis points in 12 months on their 10-year yield, the highest we've ever seen on the 30, money doesn't work anymore. We talked about this like 6 months or a year ago when it was first unwinding, and now here we are again, but nobody's talking about it this time.
Yeah, the macro across 100-year time span is what you just mentioned, that fourth turning. And for the audience, that's essentially you have, generation 20 years that experiences something, they have kids. The next generation, they didn't experience that Great Depression, that World War, and so they don't have that direct experience. And then they have kids. You get into the third generation. By the time you get that fourth generation, you have really no connection with what your great grandparents experienced. And so you don't learn the lessons that they learned. And that's where generational amnesia starts to come in. And you start making history repeats, and people make the same mistakes all over again. And that's kind of what the fourth turning is you're going through that fourth generational amnesia. And in this particular case, I think it's about fiat money versus hard money. And where does that go? Specifically, Japan has been buying, or Japanese yen borrowed has been buying not only stocks, not only bonds, it's been buying hard assets, real estate, Bitcoin, gold. And so that's literally, like you said, everywhere. That's not a correlation between Bitcoin and gold. That's not a correlation between stocks and bonds. That's a global unwind. So that's a massive headwind, but I'll bring a tailwind. I'll bring some optimism as well. The stablecoin side, the U.S. government side, is also a counter to this. The U.S. government is using the U.S. dollar and crypto stablecoins to extend the life of U.S. treasuries. Some of the biggest holders in the world of U.S. treasuries: Circle, USDC, and Tether, USDT. So the stable coins are picking up where Japan left off. Is the macro. Will crypto save the US dollar? I'll leave you and your listeners with a question mark.
Okay, well, I'm going to dig into that question mark because there's two sides to that coin. So I agree that stable coins can largely pick this up depending on how large they become and what I guess financial services are built around them so that you can do the same things that was happening with the yen carry trade. But the flip side is, if we have rates coming down across the world everywhere, how will the stablecoin companies that depend on high interest rates to be the best companies in the world fare? If we go back to ZERP, how does Circle stock trade? Right? I mean, they're obviously building their own layer one for this reason and trying to find new avenues of revenue. But like, Circle stock, for example, is priced to a world where they can just collect 4 to 5% on all of the holdings. If that goes to zero, all the revenue is gone. Not all, but the bulk.
Yeah, their revenue definitely falls, but I'll push back a little bit. I think Circle and Tether will be just fine in a world of 2% or even 1%, because they're collecting in that worst case, they're collecting 1% on 64 billion.
Which
And
could
they
be
have
640, right? By that
yeah,
time. So
yeah. So they have Tether famously has a couple hundred employees. Their revenue per employee is 100x what Goldman Sachs or any other company revenue per employee is. It'll go down to maybe 50x what Goldman Sachs is, and they're still backing up a cash machine to their office every single day. So Circle and Tether, thanks to U.S. regulatory silliness, they can't give out their yield. So they're forced, oh darn, to put the yield in their pockets, use it for business development, investment, network growth, etc. So that's Circle and Tether, some of the best businesses to be in, bar none.
Do you want to talk about some like peak doomerism here? I have another screen down here. I'm looking at his exact tweet. Your retirement account, your mortgage rate, your job security, all priced in a world where Japan stayed asleep. Japan just woke up and nobody hedged for this. This is like literally a movie trailer. This guy is good, or his AI is good. But I mean, is this that big of a deal? I mean, $20 trillion in global yen carry trade exposure. And he points out that in 1997, the Asian financial crisis started with Thai baht devaluation, which was only a $600 billion loss.
I love those.
So many of these stories. We got so much doom every day that nobody believes. It's like a crying wolf.
Yeah, it's one of those you ignore all extenuating circumstances, and yeah, it goes great to zero. That's that kind of analysis. So it's kind of fact based, but it assumes that you never have any countervailing factors. Fundamentally, people don't want their numbers to go down. Fundamentally, people don't want to go hungry, lose their housing, et cetera, et cetera. And so if you've got a big train ahead of you that looks to scramble the financial markets, there's going to be a Hank Paulson going back to 2008, ready with the money printer, ready with some of the other financial tools to step in. So there, it's more, there's going to be chaos, not doom. There's a lot of positivity in, again, some of the corners of crypto DeFi, some of the corners of AI really increasing productivity. So there's a lot of countervailing forces as well. And so I don't think it's straight to doom. It's really a big coin flip. We kind of, the world on a precipice. If I was the Hollywood writer writing the script, I wouldn't say it's straight to doom, but there are, factors that can push us either way.
Yeah, I mean, if we want to go slightly less on the doomerism, we can talk about a few of the tailwinds, at least that we have in the United States. And listen, you're U.S. based and you're building in crypto, and you're still here. Last time I checked, which I find impressive after what we went through for 4 years. So I would love to hear like just some personal anecdotes about that. But that wasn't the page I want to bring up yet, but we will. But these are some great news, right? U.S. regulator: banks can hold crypto to pay blockchain fees. So just a year ago, a bank couldn't even hold crypto for you without having cash on the other side of the balance sheet to
which
offset
was ridiculous.
that as a liability, which is insane. And obviously nobody could custody. But now, like, if a bank wants to, send a little ETH or use stable coins on ETH, they can hold ETH for its actual utility as a bank on their own balance sheet, as opposed to even custodying for someone else. I think this is huge. I don't know if they will, but the fact that they can is, it's just such a change in environment.
It's absolutely positive, and not to bang too much on the politics. And for the record, I didn't vote in this particular direction, but the new U.S. administration has really done a 180 on crypto from a crypto negativity to crypto positivity perspective. And it was already coming in the late Biden administration. The U.S. courts had decided several cases against the admin and in favor of crypto. And that's how
Yeah.
we got the first Bitcoin ETFs in, I think it was 2024, late 2023, something in that time frame.
Yeah. When
And that
Grayscale
was the
basically
courts.
beat the
That
SEC.
wasn't the
Yeah.
admin.
Yeah.
But the new admin comes in very crypto positive, and we're starting to see things that like the OCC or the FDIC or Custodia, which is a full custody. It's a radical bank. It has full custody of their
We all
dollars.
know
It's
Caitlin
not
here. Yeah.
fractional reserve. And so naturally, they've been shut out of the Federal Reserve System, and now they're green shoots there too. They might get access to a quote unquote light master account at the Fed, which is a new invention specifically for crypto. So all these admin agencies in the US flipped 180 degrees from anti crypto to pro crypto. And that is really, you're seeing evidence of that everywhere. And that banking headline you just showed, that's more evidence of that. It's crypto is open for business in the US, is what one US politician told me. It's really true.
Yeah. Clearly, it's true. We have kind of just endless news to that on that front every single day. Here's another one I love. New Hampshire launches first Bitcoin-backed municipal bond. 100 million Bitcoin conduit bond, which is not that small. And this is New Hampshire. It's not $1 million. That's 100 million bucks. It's meaningful. Could pave the way for digital assets to enter the 140 trillion global debt market. It is a over collateralized bond used by the New Hampshire government. I mean, these are crazy stories.
It's finally coming into state governments, federal government. There's talk about a Bitcoin strategic reserve at the U.S. government, which is interesting and controversial at the same time. Most people have kind of
Especially
landed
when
that.
you build it by just robbing people in other countries. Just take their Bitcoin. It's ours.
Yeah, no, absolutely, and that's how they're building it up, is through criminal seizures and stuff like that. But it's better, this is super controversial. I'll say it on your show to generate some attention, but I don't think the government should be buying Bitcoin to generate a strategic Bitcoin reserve. Printing money to buy Bitcoin, you get into a bad situation there. So, I might not be welcome at a couple Bitcoin cocktail parties for saying that, but Bitcoin and tax dollars ought to be in kind of two separate bubbles. I'm just happy to hodl my Bitcoin.
Yeah, there is a bit of cognitive dissonance in the entire yay BlackRock, yay United States government, yay strategic Bitcoin reserve side of the once strong libertarian movement that was behind Bitcoin. But
yeah, where are the cypherpunks? Where are the cypherpunks?
They're building things like you. Listen,
That's
there's
right.
okay. Let's just talk about Hemi, and then we can come back to this other stuff, because I opened the website and there you are. Look, you talking about Jeff Garzik on yield, but welcome to the yield machine, a treasury grade execution layer for Bitcoin built to power lending, liquidity, and rate markets with transparency, not trust. So you guys at Block have built some of the fundamental use cases of Bitcoin. I think it's fair to say, and this is the one you've somewhat seemingly gone all in on for now. And you and I have actually already, I mean, it's over a year ago, I think we were already talking about this, right? Like you and I had interviews about this. So nothing new, but talk about what it is, why you're building it, and why it matters, I guess, that it's on Bitcoin.
Absolutely. So we're building the Hemi layer 2 blockchain, Hemi.xyz, Hemi_XYZ on Twitter and X, which I guess is the same thing. Hemi is fundamentally a Bitcoin and Ethereum layer 2. I've been in crypto 15 years, and that arc has brought me back to building on Bitcoin. Bitcoin is a first-class asset on this Hemi Layer 2 blockchain. You can exit directly to the Bitcoin Layer 1. There's no wrapping, rehypothecation, leveraged LRT, LSTs. That fundamentally it's direct to Bitcoin L1. Bitcoin itself doesn't have a native yield mechanism, unlike Ethereum. You've got staking, earn 3 to 4% staking Ethereum. Bitcoin doesn't have staking, and we said, that's wrong. Fundamentally, you want to hold Bitcoin, you want to earn without a lot of risk as a hodler, as a long-term Bitcoin holder. And that's what we're addressing. The Bitcoin pragmatist, not the Bitcoin maximalist who's holding Bitcoin in a Swiss mountain secured by armed guards. The Bitcoin pragmatist wants to hold Bitcoin and spend US dollars, wants to hold Bitcoin and earn some Bitcoin yield. And the new factor on the playing field are these public digital asset treasury companies spending tens of millions, hundreds of millions, or in Michael Saylor's case, billions, buying Bitcoin, putting it on their public company balance sheet, and then doing nothing with it. It just sits
and watching
there.
it drop, like going all
That's
in at
right.
the top and didn't even save anything to buy the dip, right? It's great. Yeah.
So Hemi offers a solution to all that. Bitcoin yield is the next new. It's HODL, the best asset in the world, the most bomb-proof, most likely to be here in 100 years asset. That's Bitcoin. But you want to grow it. That's natural. Just like a bank savings account, you want to grow it. And yield is where it's at. And how do you get that yield? There's trading fees, as I mentioned earlier, is a very big portion right now. The yield basis and some of these other DeFi projects that lean on Bitcoin volatility. Bitcoin volatility is, a fact of life. Like we were talking about Bitcoin cycles. And when you have volatility, you have trading fees. When you have trading fees, you have yield. So all of that feeds back into the long-term hodler narrative. You can get paid for hodling. That's what yield is fundamentally.
Which is interesting because you earn it, but you don't give up control of your Bitcoin, as it says here. So how can you still be self-custodying it, but it can be used to earn a yield? How does that work exactly? Because usually it's getting rehypothecated, or you give it to someone and there's kind of a trust me bro receipt on the front end that says, yeah, you'll get it back. You've got an IOU, right? So how can I earn that while, having control of my own keys?
It's the familiar DeFi pattern. So it comes into Hemi DeFi. It's non-custodial smart contracts. So there is smart contract risk if you're in a DEX pair that's trading between, say, WBTC and CBBTC. So you're earning yield from that with a slightly elevated risk, but you don't have price volatility risk. So there's reduced risk. If you want more risk, you can actually earn 20 to 30% on your BTC, but institutions are not going to YOLO into kind of those higher leveraged, 10x stablecoin type yields.
But you were building this before we were talking about this explosion of treasury companies for years. So is that just like a boon to what you were building, or did you see where the puck was going and you were already skating there? Because it's one thing for your average Bitcoin holder to say, take 1 or 5 or 10 or even 100 of my Bitcoin. It's another for an institution or one of these pubcos say, we just bought 5,000 Bitcoin. How do we make that accretive to our, shareholders?
No, that was in the cards. We could see that coming down the pipe as soon as the courts cleared the Bitcoin ETFs in the U.S. jurisdiction. It was open season on all of this stuff. So we could see it coming down the pipe. And institutions, particularly, they're not even looking for the crazy yields. I want to earn 20% on my Bitcoin or something like that. 1% is just fine for a public company versus 0, which is what they're earning now on their Bitcoin. So 1, 2, 3, 4% is just fine at the institutional level. And that's actually attractive for them. That's a 0 to 1 moment for them. So we've been preparing for that for quite a while, and it's a bet that's finally now paying off.
Is it even yield if it's less than 10%? This is crypto. What are we doing here? You got to start at 10%, and then you have to compete your way up to 20. Then you Luna, and then we build again.
Oh God, there's a heart attack from the past. Thankfully, I was never in Luna. I could see the just promising 20% was a guaranteed loser from the get-go. But some people got to play through to learn those lessons hard.
So listen, like circling back to the previous conversation, you're a builder in the United States and you've been pushing forward regardless, I think, of regulation or legislation. Maybe they're believing it would change or that what you're doing wasn't really under their purview anyways. But we have Senator Tim Scott pushing for December vote on crypto market bill. Now I'm old enough to remember when this was definitely being signed by August and then was definitely being signed by November. So I would take this with a grain of salt. We've got everyone's favorite bald guy with glasses, CEO Brian Armstrong of Coinbase, saying that there's a lot of progress and he thinks it could pass in December as well. And then I'll just, as a, I guess, icing on the cake, SEC's done with crypto removes all mention from its agenda for 2026. So they had all these things they were going to be looking into in crypto, and they're just like, dude, just go play over there. Leave us alone. So, I mean, assuming these things happen, how meaningful is this, I guess, generally for the market, but to you as somebody who's building here?
Yeah, it's hugely meaningful. It's we're hiring in the United States at a time when the white collar tech worker crowd is seeing challenges on the job market. The crypto job market is as hot as ever. We're looking for Americans, but also folks in. We got a lot of people in Buenos Aires and Portugal and stuff like that. It's really a boon for operating in America. We have a lot less regulatory overhang. You don't have to deal with crazy stuff like subpoenas from the SEC. You're actually getting the SEC and CFTC trying to figure out where is my bounds versus your bounds. And in the past 4 years previous administration, two agencies within the admin were fighting each other over who could prosecute which crypto project. So it's just green fields and green shoots versus an absolutely draconian environment over a year ago.
Did you, by a chance, just if we want to just have some fun here, did you see the articles about conjecture that Jeffrey Epstein somehow had a connection to early Bitcoin?
I tweeted that in 2019. In fact, I was throwing darts at that. There's like a Joy Ito, Digital Garage, Blockstream, Epstein connection. And I was slinging mud on Twitter in 2019 about that because I thought they should have. It was so obvious that it was corruption and a stain, and they should have stayed far, far away from it. But that's how the world falls. So I was deeply critical of that in 2019. You can see some of my tweets as some of the hardcore Bitcoiners dug up most recently.
I mean, it's pretty crazy. Newly released documents detail Epstein's influence on Bitcoin's early development. He supported MIT's DCI with funds for Bitcoin core development, and it reached deeper into Bitcoin circles, including ties with Brock Pierce, with whom he had conversations. I mean, pretty wild. Like, dude, you were there. Like, were we created by the NSA or something, or like Mossad? Like, I don't know who's Satoshi.
Yeah, it's all BS. It's all BS clickbait. There was no like influence on the code because at that point the code was written. It's the code. Here's a controversial statement that will offend almost everybody. The code has been in maintenance mode since Satoshi left in 2010.
Yeah.
And so, that stuff occurred in like 2011, 2012, 2013, the MIT stuff. And that was far and away after the Bitcoin system was baked, working out in the field. And mostly Bitcoin core development has been kind of tweaking the edge. And this includes my career, Gavin's career, is kind of tweaking the edges of the beautiful gem of Satoshi's creation. And so we've been I'm kind of being humble, taking myself down a notch, right? Is like we're all polishing Satoshi's gem at the end of the day. And no one has made like fundamental, radical, let's take Bitcoin totally different kind of change direction. And I'm happy for that. I think that shows a Bitcoin strength.
Have you gotten any meaningful pushback from the ardent, hardcore grand wizards of Maxiism for daring to build something on Bitcoin?
You get a little bit of mudslinging from the hardcore maxi crowd and stuff like that, but a lot of that is just burned out over the years. It's kind of like the new generation of crypto folks. They had no memory of block size wars, no memory of past crypto cycles, stuff like that. So it's all new folks.
So you definitely think Craig Wright is Satoshi and that BSV is
the total opposite of what you just said.
I'm so glad that he's not a thing anymore. Aren't you?
Yeah. That's again, the court system has in the end done the right thing, both for Bitcoin in the US as well as for Craig Wright. Finally all the lies, plagiarism, all his ridiculousness is off the scene, and thank goodness for it.
What do you think as we kind of come into this potential fourth charting, Japan unwinding? I mean, there was a great tweet. Now I got to find it, but from Kobe letter, I had it, and I think I actually closed it. But basically outlining all of the massive catalysts that we're obviously getting for inflation. Like stimulus from everybody, rate cuts everywhere, $2,000 stimmy checks going to individual Americans. Like, you have to imagine that inflation's coming back, right?
The money printer hasn't stopped. They haven't stopped money printing, and in fact, the money printer seems like it's revving up again, just as the Fed was talking about, ramping down their balance sheet, and now you got $2,000 stimulus checks. So the money printer is revving up, even as they were claiming it was revving down.
But this is all the case for Bitcoin. When does the flip switch for people? We obviously have, Ken Griffin and JP Morgan all of a sudden talking about Bitcoin as an answer to the debasement trade. So maybe that is the catalyst it takes, is like they have to hear the evil emperor and Darth Vader both talking about it for them to register for the rest of the empire, right? But Bitcoin is built for this.
Yeah, I call it hyperinflation insurance. Bitcoin is it's not an inflation hedge, but it is hyperinflation insurance. So it's you get inflation goes from 2 to 3%. Bitcoin is not a massive help there. Inflation goes from 2 to 20%, 2 to 200%. Bitcoin is absolutely your savior.
Yeah.
God and Bitcoin right there.
So does that mean that if global markets collapse, Bitcoin can still just go up?
Bitcoin and gold. Bitcoin, gold, ammunition, tobacco, and nails.
Yeah. Well, I guess I will get my army of clones to meet you in Gastown.
That's right.
And we can trade.
Oh, alcohol too. Got to bring some whiskey.
So yeah, for sure. So before I let you go, what else is exciting you in this market? Obviously, I mean, we talked about what you're building at Hemi. I know that that's been your focus, but we've had all these sort of countless narratives and bubbles of things that are being built. Just generally, what do you see coming where we'll actually see some meaningful adoption and gets you excited? You're a known futurist, so tell me the future here.
Well, you always look for, where is there a ton of innovation? Where is there an oversupply of innovation that's going to burn off? Stable coins. There's like so many stable coins. We recently had a stable coin flash crash on October 10th when Trump did like a tariff thing that triggered some stable coin issues. There was a balancer hack that played into this, and the net result after all of the dust cleared is there's still plenty of stablecoin competition, more stablecoin competition coming online. And, as a lover of Adam Smith and free markets, competition always creates the gems, the best gems that are forged by fire. And so those always bubble up to the top. You got 100 stable coins, 95 will die, and the remaining
hopefully
5
peacefully.
That's
Hopefully
right.
they'll just be hopefully through the free market and not through the Luna. But yeah,
Exactly. And so stable coins are a bright spot. They're I call crypto's killer apps. Number one, Bitcoin the token. Number two, stable coins. They've punched through to the mainstream. They're in Robinhood. They're in all these other Visa, MasterCard, banking apps. You're starting to see stable coins hit, normies, the mainstream. And then number three killer app is Polymarket. That is on the lips of, Wall Street traders, taxi drivers, Uber drivers, etc. So all these 3 crypto killer apps have punched through, continue to be exciting, continue to feed innovation. What's going to be the next new? I don't have my crystal ball that far tuned into the future. But if there's a lot of, kind of chaos in the world, macro chaos, Bitcoin is going to be the calm, the eye in the storm.
Will Bitcoin be the reserve currency of Mars? You guys don't know, but Jeff and I always end up nerding out on space stuff. You're my go-to guy, but are we going to Mars, and is Bitcoin coming with us? How about that one?
Yeah, absolutely. Fundamentally, I've always loved Space Chain, one of my projects. Sent 6 satellites to low Earth orbit, one of the only startups in the world that's ever done that. And that's a crypto startup. So you crypto listeners should be proud of that, because you were a part of that. And we're going to see cities on the moon very soon. I'm involved in a project related to that. We'll see cities on Mars. We've got the president saying we want people on the moon before he leaves office. So that's given new urgency to a lot of these rocket companies like Rocket Lab, Blue Origin, which just had a massive success. And of course, Elon Musk's SpaceX. And all of these folks, trivia, they love crypto at those companies. Obviously, Elon and his Doge fascination. But the Blue Origin folks, the space folks, anytime you talk about space to space folks, governance, jurisdiction, and money comes into the conversation. And that's where crypto enters the conversation. So space and crypto always going to be best friends.
For sure. Yeah, I love having these conversations with you. I really appreciate it. Everybody should be giving Jeff a follow. You're one of my favorites on X. Where can everybody, you said it before, but let's say it one more time, where can they check out everything you're building at Hemi and participate?
Check us out on the web, hemi.xyz, hemi.xyz. Follow us, hemi_xyz on X. Follow me if you want spicy crypto and world takes, Jay Garzik on X.
Thank you so much, Jeff. Tell Matt I said hi. I owe him a conversation too. Matthew, proper.
I will.
Circle up to do one, and we will definitely have to have you back very soon, man. Thank you so much. Really appreciate your time.
Thanks for having me, Scott. This has been great.
Awesome, man. Bye, everyone.
Let's go.